Hey guys, Omkar here for Simple Snippets. This is new playlist of financial accounting. Here we start with first tutorial, which is Accounting Basics 1. Financial Accounting Basics. The first question comes to our mind is, what is accounting? The answer is quite simple. Accounting means recording, classifying and summarizing of transactions, events and adjustments in books of accounts. So accounting is basically recording, classifying, summarizing of transactions, events and adjustments. Now what is a transaction? A transaction is an economic activity in which a thing is exchanged for money or money's worth. For example, if I go to grocery store and buy some goods, then I get the goods and I pay the price for it. It is a transaction. Second example is, if I go to ATM and if I do balance inquiry, then the balance which is there in my bank account appears on the screen. Here, no money is exchanged or money's worth is also not exchanged. It is not a transaction because there is no any economic activity in which a thing is exchanged. On what basis or assumptions transactions are recorded in the books of accounts? First is going concern, second is consistency, and third is accrual. Now, going concern means the enterprise is continuing in operations for the foreseeable future, which means it is assumed that the enterprise has neither intention nor necessity of liquidation. The second is consistency, which assumes that accounting policies of the company are consistent. And third, accrual means revenues and costs are accrued, that is recognized in the books of accounts when they are earned or incurred and not money is received or paid. On these three assumptions, all transactions are recorded in the books of accounts. We move further. Now, the crucial point is why to maintain the accounts. That is, why to maintain books of accounts or simply accounts. Here are some pointers. First is to know profit or loss from any activity, that is performance. Second is to know to whom money is due or from whom money is receivable. Third is to submit accounting results to authorities. Various authorities like government, banks, tax department, etc. That is SEBI, you can say, requires details of accounts maintained by the company. So that is why it is necessary to maintain accounts. Next, to analyze past performance and to plan for future. And last, other reasons, in which you can say for use of investors, for use of economy or industry as a whole. The next question comes to our mind: who keeps books of accounts? Accountant of company or accounting department. It is responsibility of management to maintain books of accounts. How books of accounts are kept? In physical form or in electronic form? 99.99% of the companies in today's world maintain accounts in electronic form. There are hardly any companies which maintain books of accounts in physical form. So, how books of accounts are kept? Books of accounts are kept in electronic form. There are various softwares such as Tally, SAP, etc. to maintain books of accounts in electronic form. Now, what should be done to maintain these books of accounts and how transactions are actually recorded in the accounting process? To know that, we should first know what are the components of the accounting process and how this process flows. So, accounting process. First of all, identification of transaction, then journal, then ledger posting, trial balance, adjustment entries, and last, final accounts, which basically comprises of balance sheet, P&L statement, cash flow. So in accounting process, first of all, the transaction is identified whether the record or an economic activity is transaction or not. If it is a transaction, then it is journalized in journal. Then further, as per accounting system, it is posted to individual ledger. When ledger posting of all the transaction is done, trial balance is prepared. This trial balance should tally. Then adjustment entries are passed. Those are known as year-ending transactions or year-ending entries. After following all the 5 of these steps, final accounts are prepared to know the performance of a company. That's all guys for the first tutorial. In next tutorial, we are going to see what are the types of accounts, 3 golden rules of accounting, and double entry system of bookkeeping. Stay tuned. Thanks for watching. If you like video, please give a thumbs up. Don't forget to share this video and please subscribe to our channel. Peace.